then yeah, we'll go ahead and get this started. So usually with these, right, we'll kind of start on that daily. Get a overall picture of what we've been doing. Hide this for now. Ever since really here, once we overtook this fair value gap, we've just been expecting higher prices. So we got into these relative equal highs we were looking for rather aggressively with CPI, right? We shoot right up and through that, kind of clearing more daily fair value gaps as well. And now we still have that same objective of higher prices. So kind of like we saw here, right? Huge expansion is going to get followed by short-term consolidations. That's really what we're experiencing now these past few days. CPI delivered into a daily objective, right? We'll see that as we kind of work through it. And after that huge expansion, we can expect price will consolidate, especially as we created multiple daily volume imbalances. So the day after CPI, right? Actually, even before. So 1, 2, 3, 4, 5, 6 volume imbalances. So this is kind of the consolidation signatures we would come to expect. As we mentioned, this high here on Wednesday would kind of be our next objective. As I work through the lower time frames, though, we'll see that, keep that on buy side for now. So although we have higher objectives, I kind of would like to see a potential run lower first, if we're being honest. So like on the 1 hour, if we look at this 1 hour chart, so we have a lot of daily volume imbalances here, but I'm looking at this 1 hour fair value gap here. So this was obviously CPI, right? We can kind of look before that Monday. We just consolidate, we run out of short-term low quickly. And we'll talk about this as we get on the lower time frames, but on that higher time frame, right? We're clearing that short-term low. We break structure at the high. We leave a 1 hour fair value gap aligned with the new week opening gap. Tuesday, CPI, we consolidate. And now for CPI, we run into that fair value gap, still holding the new week opening gap. And then we got that huge expansive move higher. So at this point, right, Tuesday had delivered into a daily fair value gap here. That's the objective we were speaking of. So on Tuesday, when we hit this, we were already really expecting the rest of the week was going to tend to consolidate around this daily fair value gap. So if we drag it out, you'll see that's really what occurred, right? We continue to gravitate around that. We did have higher time frame objectives here as well. So this is a 1 hour fair value gap. We come into the high of that, right into the consequent encroachment, and then that ends up being high of the week. So once we hit that objective now, we just really compress between that and that daily fair value gap, right? The daily volume imbalances. You're really starting to see all of these daily levels that are kind of being formed here, which means that we can really consolidate around these for some time, right? We want to see price starting to kind of move away from these for us to resume that just trending environment. So we didn't have anything on Monday, right? We can look at that on the lower time frame though. So Monday, we created a short-term low just after midnight. So we have that midnight level. And then you'll notice that during the New York session, we actually come and clear that out. So we're running that short-term low. Notice how we close inside the range. That's what we like to see if we're kind of expecting reversals. And this is here, it's pretty choppy, pretty ugly. But right, we still kind of hold that liquidity. We then break higher. At this point, we're really just using the midnight level. So there's a lot of up and down in here. Right, but that midnight level still being respected, so we can like to see that. And then ultimately, once we kind of get above this original fair value gap we formed here. So if you notice right at 9:30, we create kind of that Judas swing. We run up to clear some short-term highs. We break lower. If we were bearish, this is a fair value gap that would hold. So after clearing sell-side liquidity, if we can get back above that, we would expect price to continue to now resume bullish prices. And especially because we still have the bullish overall bias. Right, we wanted to see price continue to move higher, so any run lower should really be seen as a short-term run on stops. Oh, may I ask why you settlement prices on the daily? Yeah, for me, honestly, that's just what I've always used, right? It's something that when I first started learning ICT, I had it on. So I didn't really know what it was at the time, but when I was learning, I always learned with it on. So it's more of like a personal preference thing. To where if I keep it off, right, some of the daily volume imbalances aren't the same, or the candles. But for me, I like to keep it on just because, yeah, I guess I would say I got comfortable with it. I got used to using it. So I would say it's not really a hard sell either way. I've found that the levels that I label with this on get respected pretty often, so I've never really had to bother changing it. But yeah, we'll check back to Monday quickly. All right, so after clearing that inversion, really we just kind of were off to the races at that point. We had created relative equal highs perfectly aligned with the new week opening gap. So this became our buy side right at 8:30 here. And ultimately we got up and above that buy side. So it's nice to see that delivery, right, where we continue to kind of stair step. This in here was pretty choppy delivery, right? A lot of give and take. So the high resistance, but we're still kind of respecting PD arrays, right? We can see the volume imbalance created after getting above. The inversion gets held as we follow now, right? Discounts here. So in this type of delivery, it's really like the lowest discounts that get respected, right? You notice that. So every time we go higher, the lowest discount, we come back in to test that. We then go higher again, right? Break this high. Notice that lowest discount here again gets revisited. So we continue to really revisit into a deep discount while ultimately still delivering into that target, right? Same way here. That lowest discount in the form of the 1 minute volume imbalance gets traded into. So a lot of give and take. We ultimately get up and through that fair value gap, a little bit higher as well. And then we come back down into this fair value gap as well. So this fair value gap here is our higher time frame, right? If I go back to that 1 hour, boop. Right, this is the 1 hour. So we have a higher time frame transposed, and then that's what the lower time frames are continuing to reference, right, as we go back to that. So this is that 1 hour, right? And you see how we really just sit there as we head into CPI. So at this point, you can obviously see, right, we're just consolidating. You get short-term setups in here, but nothing really of interest. The only thing that's of interest is this new buy-side pool that we've created here on Monday, because now we're going to use that on Tuesday, right? So you see that we come back into that perfectly. Let's also look at the lows here. So you want to see, when we have CPI, you want to find the liquidity points and see how they get interacted with. So first, right, this was the high, this is the low of the external range liquidity points. And now we're consolidating heading into that. Before CPI, we actually did barely run that. Right, so if you look, you'll see how we go one tick above. That right there is, sure we're running it, but it's not really a significant run. So we could still use this same high as really the high that we would be aiming for. Right, it's now paired with this one, so you have relative equal highs, of course, as well. This high as well. And when we were live streaming this, we actually wanted to see if price couldn't give a deeper retracement potentially, right? CPI is pretty violent. So maybe we thought this low, right, could be ran. Instead, we only run the consolidation that was formed here on Monday. So we run that real quick, still holding the hourly fair value gap. But now we pick up all of that sell side that was formed. Because if you're thinking here, right, in this little consolidation area, lots of sell side was formed. Right, and buy side. So we could see how we created really two areas of liquidity that we could then interact with. Sell side gets tagged first, and then CPI gave us that huge explosive, right? Basically 100 handle move from the low to the high of that swing and into that daily fair value gap. We can go to the, right, on the 5 minute sense here. As we were kind of pushing higher and higher, we create this wick on CPI, and now when we break above this wick, we're doing it with the fair value gap. So in a way, right, this would be seen as that balanced price range. And as we were looking at this in real time, we had the 5 minute labeled here like this. Because as we create this swing high, right, we're creating swing high, we're retracing, and then we're getting back up and through that swing high with a new discount. So this is the 5 minute. As we go to the lower time frame, we'll kind of see how that interacted with price. So here we have that same, right, little structure now. You can see the swing high actually be put in place. So whereas this was the wick, right, this becomes the wick here on the 1 minute chart. We create the wick, we retrace into the fair value gap here. And now with how bullish CPI was, right, we did not even want to revisit this fair value gap here. So I had no intention of trying to come back down into this. Instead, we just continued to push and push. So you'll see that we hold this quickly. Notice as we leave it, we come into it, we leave it with the fair value gap. Right there's another opportunity. Price wicks into that, and then breaks above the actual swing point, even before that, right? Notice as we're breaking into the wick, gives you that volume imbalance we look for. Hold just sends us higher, volume imbalance here as well. But this is a 5-minute fair value gap, so we'll kind of have that transposed, right? If we were to drag out the volume imbalance, we see how we kind of play around it. It ultimately does hold us, but it takes a few tries, so we can keep it up here. We really just like to see, though, that 5-minute fair value gap getting created as we blew up and through this high, closing above. We still have higher time frame targets here. So now we have short-term buy side, right? We retrace into that 5-minute. Real quickly, you could even see, right, this fractalized YouTube setup here. So if you have the eyes, short-term low. Now, even though it is equal lows here, right, this is still a short-term low being ran as well. It would have been nice to see this candle run these equal lows. Doesn't happen, right? You're not always going to get the perfect delivery you're looking for. But we still have that short-term low being cleared. We then break structure here, right? This is the swing high as we're breaking back above the volume imbalance. And notice as we're doing that, we're also creating a new fair value gap. So then this fair value gap becomes the discount that holds us, right? We get above it, volume imbalance paired with the 5-minute. Like if I pulled up the consequent encroachment of this 5-minute, right? Notice how we're using that as well. So all of these areas kind of aligning to a hold price, support price, send us higher. We wick into that 5-minute a few times, and then ultimately we do expand higher. And this is where we kind of shared that first intro we had on Tuesday, this volume imbalance. Because we saw that price was really unwilling to continue lower. CPI tends to be very one-sided. As we break lower, or not really break lower, but as we retrace lower here, right? The fact that we couldn't even get into the consequent encroachment of that fair value gap, I don't know why it keeps doing that, but we couldn't even get into that, right? Before we then once again continue to trend higher. So when we see something like that, we can kind of expect that price is extremely bullish, right? This more than likely will become a breakaway gap, and we can look for price to continue to push higher. So now on that 1-minute sense, as we hold the 5-minute fair value gap and expand away, right? We're breaking above this high and closing above it for the first time, and we leave behind a fair value gap. So we're breaking above this, closing above, right? That's what we like to see, close above it. We then wick into our entry here, body still holding, which was nice, and then we expand again up through that new week opening gap. And as we did that, we created a new fair value gap. So this is where we added, right, our second position, just stacking it. Because kind of in the same sense, this candle is breaking this swing point here. So we're breaking through highs, creating new discounts. And now we can expect those discounts to hold us if we're bullish. All right, so that holds. We continue to deliver higher. We have higher objectives here. This here was a swing high on the, let me be sure here. Swing high on the hourly chart, right? We'll show it to you. So if we go like this, these relative equal highs here, right? So these perfect equal highs, and then we had relative equal highs below it. That is what this buy side pull here is. So now as we go back to the 1-minute on Tuesday, that's this level here. So we see how price, right? We have a buy side target. Price has already been showing a willingness to continue to expand. So when we engineer these highs, we expect this to be more of just a suspect high, right? Short-term liquidity, especially the fact that it falls just underneath this higher time frame liquidity. So when we see something like that, we would expect that these highs would be ran. Any retracement here is a short-term retracement returning into discounts, right? We wouldn't expect price to continue to deliver lower. So when we see something like this giant bearish fair value gap here, we would look for price to now overtake that. Right, so we create the bearish fair value gap. Notice we also have a bullish here. So we're creating an inversion and a bearish. If we can overtake these two, then we'll be kind of right to continue to aim for these highs. We'll go buy side. We go lower. We start now progressing up back and through this premium. And as we're doing this, we're already creating discounts right away. So at that very next candle, it creates a volume imbalance. We then do it again here on the very next candle. So you see how price is now engineering discounts. If we're bullish, this is what we want to see, because now we can expect that these discounts should hold us and deliver us into our buy side objectives that we had. So ultimately we get back above this 1 minute here. We finally get above the actual bearish, and now that becomes our inversion. So we give a deeper retracement back into consequent encroachment of the inversion here, right? If I move this level. So we have this original, right? We hit that level perfectly. And then notice how the next candle that opens with the volume imbalance opens on the actual bearish inversion. Volume imbalance once again, right? We like to see that, indicating price wants to continue bullish. Once again, we got another one. So just good signs we like to see here if we're expecting higher prices. And then we delivered into that buy side. One thing to note is that we often speak of how after delivering into buy side, we can retrace into untouched discounts and continue. And that's what we see here. So we actually, there we go. So right, only after clearing the buy side do we return into this discount. So this candle clears buy side, next candle clears higher time frame buy side, and then only then does this candle return into the volume imbalance. And from there, we just continue that bullish delivery. So another volume imbalance. Right, next candle creates another volume imbalance. So you see how we're putting in these bullish signatures. This one's paired with a fair value gap. Right, price returns into that fair value gap before continuing to expand higher. And then ultimately, we got into this here was that daily fair value gap target. So that's kind of the target that we had been aiming for, right? The daily fair value gap. And we get up into that. After we get up into there, this happens during the morning. So we weren't really too sure if we would want to, right, continue to expand. We honestly expected price to really just consolidate here most of the day. But we still get some short-term setups that take place, right? So we get above it quickly, we break lower, holding bearish fair value gaps. We then break lower here, creating a short-term breakaway gap that gets revisited later. But now at this point, we're really just returning into, right, like this inversion level, lower discounts. So after hitting a higher time frame objective like this, price tends to kind of just wander. Right at the time, this level here was a volume imbalance that was created. So this will kind of play more importance later on. But as far as Tuesday itself, after hitting that daily, we really just kind of consolidate. Right, we still have setups that form. So like we can look at this here, this daily fair value gap. Notice as we're leaving it with a 1 minute fair value gap here. And now this candle, I don't think it got into there actually. Oh, you cannot see the screen. Sorry, brother. I just read that right now. Hopefully you can see now. Others can still see, right, though? Y'all good? Cool. Okay. Yeah, sorry about that then, brother. But we still have this. So on Tuesday, right, this is kind of heading into the hours we don't really trade, lunch, before the afternoon. But on Tuesday, we create the short-term low during the lunch hour. Equal lows, right? That's important as well. We'll move this because we don't really need that. But we engineer the short-term lows, right? Short-term equal lows during the lunch hour. And now at 1:30, the real afternoon kind of session we look for. Notice how we have ran this short-term high. And we did fail to get into this 1 minute, but we're hitting the actual daily fair value gap. So this is an instance where higher time frame levels can kind of supersede the lower time frame charts. Right? That daily fair value gap was more important, more sensitive. So we didn't really need to get into the actual 1 minute here. The daily was enough, especially after running, right, short-term highs here. And now if you notice, after we clear the short-term high, we create a bullish fair value gap. And then we overtake that with the bearish as this breaks back underneath this range. So at that point, if you're seeing something like this and you're expecting to see short-term lower prices, right, kind of attack the lunch hour lows potentially here for the afternoon, this could be the low risk sell. So we're breaking back into the range. We have the bearish fair value gap overlapped with the bullish inversion, and you'll see how the candle bodies respect that level. We end up opening with the volume imbalance, but in theory, right, we still never really close above these levels. We're opening above it, but notice how we don't wick one tick higher and immediately kind of close back inside. And then the next candle from there, break structure here. And at that point, right now we get a kind of a true, more clear structure break. Oh, bless me. Gee, sorry. But yeah, after getting that break in structure, here at this low, candle closing below, bearish fair value gap here now holds us, and we start to now attack those equal lows that were left behind. So first we go for just right the short-term low here. Notice how we hesitate there first. All right, we tap into it quickly, give a slight retracement, break again aggressively, attacking now relative equal lows here. And you can really see how, right, price is kind of referencing these levels. So now the equal lows, right, look how we close there now. We hit the equal lows, we close there, forming a new bearish fair value gap. That holds us. Look at the candle bodies. So closing once again on equal lows, right? Once again, we have a swing low here. So each time we're getting to a swing low, we're offering us just a little hesitation, right? You're seeing how that's happening. We break higher, we break lower again, and then we have one more premium that gets formed before that sell side objective. So we form one more bearish fair value gap, we trade up into that, and then finally we deliver into that sell side that was created during the lunch hour. At this point, we're looking for kind of a purge and revert, right? That's what we get here. So if we drag out that level, we like to see price quickly snap back above it, and then the next candles kind of respect that. So we hold it here, we open with a volume imbalance, just kind of back into this down close candle. But then ultimately this candle as well overtakes it, and now we start returning back up for the buy side here. So this is now where you can return to this 1 minute fair value gap and say, okay, right, we've done the objective of running out sell side, sell side, sell side. At this point, if we're going to kind of be consolidate, seek and destroy, right, it makes sense to target opposing liquidity, which is now buy side. And when this buy side is perfectly sitting right at a 1 minute inefficiency, that right there is telling. So now we have this as our target, right? We continue to now expand back up and through, right? Same way, that last premium that gets formed here, right? As we get above it, we're going to use that as an inversion level. And now we can really continue to look to the left, and all the inefficiencies that we created as we're breaking through them, right, become inversion levels. So we get above it, we get above equal highs here, getting above this fair value gap. And we really like to see when we get above it aggressively and kind of leave them as breakaways, right? So at this point, we return pretty extremely bullish, reaching up and into that buy side pool here. Right, not only do we hit that buy side, we then hit the actual high that we created in the morning. So we're seeing price kind of create these little seek and destroy, right, where we're engineering liquidity, attacking sell side first, opposing liquidity, and then returning for people that may have been short, right, kind of picking up that liquidity. Once we get above this buy side, notice how we give a deep retracement again, right back into discounts here. So a lot of back and forth, as we were really expecting, following the huge expansive range into the daily fair value gap. For power hour here, right, the main objective was kind of just to return back into this range, right? You see that this inversion holds us nicely. But once again, we can kind of look at that inversion as a potential entry. So as we're breaking above buy side, right, we're doing it with a bullish fair value gap. If that fair value gap was to give way lower, we would expect price to want to continue to trade lower. So when we first close underneath it here, right, we notice that we actually have a premium that was formed in the form of this 1 minute. So we actually get back up into that 1 minute first, and then we break again, right? This is actually where we took a short. So as we were leaving, right, we hold this premium, we're breaking back underneath the liquidity, and now we're opening with a volume imbalance as we're leaving this inversion here. So at this point, we understand this high should be protected. There's no need to return back above that high, right? We use the volume imbalance. Pretty lucky entry because we didn't even get a tick above. So we hit that perfectly there. And then we got out pretty quickly just at lows here. So 5 handles, but ultimately we got a deeper run. And for those that were sitting in here live, right, it was a pretty quick, aggressive move lower. Once we tapped that volume imbalance, we got right through that sell side. And then we really returned deep into this range here, as we were mentioning. Once that happened though, so we hit this range, we hit the discount here, and then we just returned into equilibrium. So we turn into equilibrium of now this range, which is really aligned with the daily fair value gap. So we see a lot of movement on the 1 minute chart, but like if I was to show you higher time frames, we're spending a lot of time within the daily fair value gap. So we understand we're likely to consolidate around that level, which is why we look for a lot of give and take here in this price action. So yeah, that was Tuesday, CPI. So following CPI, we had mentioned that, okay, all right, let's go to a higher time frame quickly. Clean all this. So we had seen, all right, Tuesday, we've already expanded into the daily fair value gap here. We would expect price to kind of sit around this for most of the time, as we spoke earlier in the morning. We did label this 1 hour because we had a 1 hour fair value gap just above. So if we were going to get above this daily fair value gap, how high could we go? Well, it would make sense to return into this, which was a swing point. So this is buy side paired with a higher time frame inefficiency. Right, that's why we were kind of looking for that. Lo and behold, we hit that perfectly, and then we just continued to bounce within here. So we'll look at that on the lower time frames, but we understand on the higher time frame, Tuesday was really the main kind of right move for the week. So most of that weekly range took place on Tuesday, Wednesday, Thursday, Friday, lower probability conditions, just trading within that range. One thing to notice quickly though in the short term is, right, remember this is that daily fair value gap. So here on Tuesday, right, we can't get above it. But now on Wednesday, notice how we break above it with the 1 hour fair value gap. So now we have this new discount as we're breaking above the daily, right? If we were looking for this to reach into this 1 minute fair value gap, we would expect this 1 minute or 1 hour discount here to hold us. So as we're clearing a daily fair value gap, we're creating a 1 hour discount fair value gap. That should hold us as we deliver into a higher time frame target. And that's what we see here, right? We come into it 1, 2, 3, 4. We really like to see how the candle bodies don't even close near consequent encroachment. So we're wicking into the daily fair value gap, candle bodies holding consequent encroachment. And then ultimately we got that delivery into that buy side like we were expecting into the 1 hour. This all took place before we even were here though on Wednesday, right? So we're not really trading any of this. All we can do is kind of come here at 9:30 and see that price has already done this. So after seeing that, we really now expected more consolidation to continue because we had such a rejection from this 1 hour fair value gap and the candle bodies, right? Just like they were not really closing their consequent encroachment here. Look how the candle bodies are really hovering away from that buy side and that 1 hour to where they don't even really want to close near that level. Even after this candle opens with that volume imbalance, right? We completely negate that and hold the bodies away. Let's go to the 15 here, right? Remember daily fair value gap. Yeah, Wednesday was hideous. But we'll take a look. So we created this rejection block here. But as we mentioned, all of this delivery in here happens before 9:30. So we've hit our objective before 9:30, which means more than likely the morning is also going to consolidate. And that's really what we get here, right? We get another run up into that daily fair value gap off of the 1 hour fair value gap. So we're just referencing higher time frame PD arrays, right? Bouncing back and forth between them. Not really in a hurry to go anywhere. We'll look at the inner workings within here. So at 9:30, right, because we were still able to capitalize on this. So remember, we have the daily fair value gap, the 1 hour fair value gap. We have created sell side here prior to 9:30. And now we wanted to see, okay, so we have sell side here and we have buy side here. Consolidating market, right? We're more than likely going to just kind of seek and destroy, bounce between PD arrays. So for us, right, especially because this is the 5 minute fair value gap as well. Let's go to the 5 minute, just so we can have a clear understanding of it. So 5 minute fair value gap as well. Cool. So we wanted to see if we wanted to come for this low first, right? So if 9:30, because this is the 9:30 candle, if we could have created a Judas swing to clear out sell side, we would have targeted buy side here. But because we go for buy side first, that kind of informs us that, right, if we get a kind of a bearish shift, we'll now safe to target sell side since we've left this here. So at 9:30, we expand into that buy side. We're holding the 5-minute fair value gap. That's what this is. And then we form that breaker, right? High, low, higher, high, broken. We were looking at this here as well. Because this is a 1-minute fair value gap. And now if you were here with us on Wednesday, this is actually an old daily high here as well. So the high of this fair value gap, right where this candle is, was perfectly the old daily high. So as we were breaking back underneath that, now creating an inversion, an aggressive down close candle, we were expecting price to reach for sell side here. So we got short right on that level on the immediate rebalance, stop above the candle high. And now we did spend some chop in here. Ultimately, we kind of hold and respect this 1 minute here. And then we finally got that delivery into that sell side we were expecting here. Notice it gives you kind of one more chance with that volume imbalance entry. We have that here. So we had a volume imbalance. We then hit sell side. At this point, we understand we're not going to continue to deliver lower, right? Or at least we wouldn't expect that. We're in a consolidating market, runs on external range liquidity. If they're followed by, right, kind of purge and revert or any type of bullish structure shift, we now expect buy side to be targeted. So now we could form new buy side here that can be used as a target. Bang. So now, do I have this off? Oh no. Hold up 1 sec, sorry. Oh, it only does the last few days. Okay, okay. Okay. Just looking at something quick. No worry, no worry. Back to Wednesday. So buy side is the objective, right? We're in a consolidating market. We expect a lot of give and take. So runs on external range liquidity, right, should be met with kind of a reversal that we could trust. So as we run this low, we do the classic purge and revert, right, where the next candle immediately reverts back into the range. Notice how the next few candles, right, barely tap that level, but can't get any lower. So now we're watching here. This is the midnight level, right? We have a volume imbalance here. And now there's also a daily volume imbalance here as well. That's why I don't know where my levels are. 1 sec. Daily. Okay. I deleted it, that's why. I gotta bring up that level again. Okay. So we had a daily volume imbalance. That was this level, right, where this immediate rebalance took place here. For some reason, I can't seem to get it to transfer over here. But the same way that we took the short on the immediate rebalance here, right? So as this aggressive down close candle comes lower, we're getting short on the immediate rebalance. We were trying to do the same thing here. So as we got above, we missed this initial entry, but then we had the limit kept, right, set here. And as we wick into this, this is actually where we got short. So we caught the swing low, which was nice, right? We didn't actually get in on the low. There was a few opportunities. You could have used the midnight level, which is here. You could have used the inversion. We went with the low hanging fruit, so a little higher entry, but still precise nonetheless. So we get that swing low, and now we start expanding into buy side here. For us, we got out pretty early, right? It's just a 5-handle trade for us, so we weren't aiming for anything too kind of crazy. There was a 2-minute fair value gap within here. So if I go back to the 2-minute quickly, right, there's a 2-minute fair value gap right here. So now as we cleared the sell side, this is where our exit came on. All right, let's go back to that 1 minute. So this is that 2-minute overlapped. And now as we created the equal highs here, right, our exit came as we run up and through the equal highs right at the high of that 2-minute fair value gap. So ultimately that 2-minute holds as an inversion. We don't get the full run into buy side, but as we mentioned, we like to see price deliver as expected. So we're still content with this delivery here, right? Breaking above the bearish fair value gap, creating it as an inversion, engineering volume imbalances, and delivering into buy side targets. We hit that buy side, we actually come back into the daily fair value gap again quickly, and then give us a retracement back into the untouched inefficiency. So as we once again often speak of, untouched inefficiencies, once we deliver into buy side or sell side targets, right, that's when these inefficiencies tend to be kind of retraded into. So we come back into it, still holding it, right, wicking, delivering into that buy side once more. So we created a short-term high here. We end up running that. Running that short-term high, playing inside the daily fair value gap. And now we create the U2 model lower. So at this point, really the same way that we expect, right? Sell side here, once we interact with sell side, we can expect to run on liquidity, right? Once we've picked up buy side, we can look for short-term runs on sell side liquidity now. So once again, that consolidating market, a lot of give and take. No, I do not have second data. Sorry, Biker. I just saw your message. I don't have seconds data anymore. I don't necessarily look at anything under 1 minute. What are these equal highs? Okay. So these equal highs will be used for later. But as far as this actual price action, when we were sitting in here, right, we did create equal highs, but the one thing that is tough, right, we create these or this short-term high here. So sometimes, right, price will engineer these highs and leave them for a later time to where they don't always have to be interacted with right away. So when we engineer this equal high, but we clear this short-term high, and then we break structure here, right? This, in theory, really is that U2 model. It would have been nice to clear both highs, but we're still clearing a short-term high. We're breaking structure. That fair value gap then holds us. And now we break structure again at this low. Right, notice closing below it, engineering a new fair value gap. So notice how we don't retrace until we close underneath, right? We wick on it, don't close underneath. Volume imbalance, still don't close underneath. We finally close underneath, signifying price can go lower. And then we get the retracement into the premium fair value gap, right? Another break lower here, followed by one more fair value gap touch. And now we break this low. Now we attack inner range liquidity, right? So we had sell side, all these lows in here are sell side now. So sell side here, right? We can kind of just bring up a few to point out how they get traded into. But we have sell side there, right? This is sell side here. This is sell side here. And then this is sell side here. So once again, notice what price does is it kind of interacts with these areas. Right, we have sell side. This first one we break right through. So that right there kind of signifying price wants to run lower, right? We create that breakaway gap in the short term. The next sell side that we trade into, right, we give a little hesitation, but then we actually break through that, leaving the up close candle. That's what ends up holding us, right, after we deliver into this sell side now. And notice how in the same way, right, when we close underneath it, that's when we then retrace back up into this premium here before finally going lower one more time into this short-term sell side. So sell side became the target. We're in a consolidating market. Buy side has been taken already. It makes sense to now target that sell side. Right, we get sell side here. We do get a deeper retracement. So now at this point, notice we've engineered a short-term low here underneath, right, this higher time frame sell side pool. So now we have relative equal lows that we can look for. We still expect price to deliver into these and continue lower, right? It's already done the work it needs to on buy side. So in the time being, we would look for sell side to be targeted, right? You do get a little setup that forms here during lunch. Short-term high cleared. We then break structure, head lower. Right, notice how as we break that structure, right, we do it here. We can also say here as well, because the candle closes underneath. So as we're leaving this one, we're creating a volume imbalance. But notice how it's only after we break through this low and close underneath it do we retrace back up into that. So we actually leave this fair value gap open. That's because we have this volume imbalance played with the down close candle here, right? That's all price needs to return into. You see that 1, 2, 3, 4 times, holds, now breaks under the midnight level and the swing low here. At this point, we have sell side objectives, so we would expect bearish price to continue to deliver, right? Especially as we break underneath the midnight level. We then wick up into it quickly. Notice how we create equal lows first, and then this candle in one motion wicks both of them. You can see that we didn't have really, right, a clean run on this. So we wick it, we create a bearish fair value gap. And at this point, this is where you would look to see if, okay, if we're going to resume bearish, the most recent premium should get overtaken. And that is this bearish fair value gap here. So now if price wants to run higher, right, this should get overtaken, become an inversion. Instead, we use it as resistance. We now break through this candle's low. And if we're going to do that, we have lower objectives that we are aiming for at that point. Right, so at this point, this is that daily volume imbalance. Let me show you here. So we've broken underneath, right, the wick. We're doing it with the volume imbalance. Gives you that volume imbalance entry. But now how far down can we go, right? Well, we have a daily volume imbalance here. And then that's what price ends up wicking into. So we actually hit, right, this is the new day opening gap for that day. So as we break underneath the new day opening gap, we use it quickly as resistance as it's paired with the fair value gap. And then ultimately we deliver into that sell side. Right, so now we still would look for kind of reversal patterns, right? If price wants to resume bullish, the most recent premium should get overtaken, and now that's here. Right, it's also paired with the new day opening gap. And now if we were to get above that, we are creating a breaker. So now as we see this pan out, right, we can trust that this will resume bullish. Low, high, lower, low, broken. So we have the breaker formation. We now also have the inversion fair value gap. We have created a new bullish fair value gap with the volume imbalance. And we are overtaking the new day opening gap after running sell side as well. So you see how all of this, right, is really building the narrative to where we're already expecting kind of consolidation. This was a little deeper run, but still, after clearing all the sell side now, when we get that reversal, right, we should be confident that this should hold us and now deliver to opposing liquidity. So now we have this high here that was formed during lunch, right? And aside from this high, the same way that we did with all this sell side here, right, we now have all of this buy side here on this leg. So the market's always moving, right, from sells to buys, engineering liquidity to attack. Like if I was to show you, right, this high here. So now if we're attacking buy side, notice how buy side gets interacted with. We have buy side here that gets attacked first, right? We hesitate there, retrace. We have buy side here. Well, as we break through this buy side, we're doing it with the fair value gap. And then look how the next candle respects that, right? We then have the equal highs, so we could just drag that out. And these equal highs are paired with the volume imbalance. So this level in itself is already going to be, right, kind of a key level. And look how much price spends time here, just up and down, up and down, up and down. Right? Ultimately, we can get above it. But we spent so much time here because it's that last premium before the buy side. So not only is it highs, right, it's a volume imbalance. It's a fair value gap. We're also returning into this here, right, that down close candle or the up close candle. So we're running into a high resistance area. And that's why we see that high resistance liquidity run signature. We're a lot of back and forth. Ultimately, we do get into the buy side. And then after buy side, once again, right, we attack sell side here. So in this case, we had already gone so low here and created that reversal, right? The daily volume imbalance has been hit and we're getting back above the daily fair value gap. So this run lower is simply picking up the short-term lows. It wasn't trying to reach all the way back into this low that we had formed already. Instead, simply picking up some short-term lows, hitting that daily fair value gap, and then returning into that kind of consolidation marketplace. Right here during power hour, we do get really a little run on stops, right? So this power hour was pretty lackluster. Right, we do clear short-term highs here. And now what we would kind of look for with this is like what PD arrays in here we use on the way up. So we have this volume imbalance that becomes an inversion volume imbalance. Right, it was the last premium before that high was cleared. Price was using it as support. We clear it. So now if we were to break back underneath that, right, that's a sign that price is going to give way and continue to break lower. So we close underneath it here, right, tapping into this volume imbalance quickly, and then we actually trade lower from there. So we break underneath the midnight, don't even return into that, leave that breakaway fair value gap, right, simply using this one here. So it's now breaking lower, right, we're breaking underneath bullish fair value gaps. And this one's fairly important because if you notice here, right, this is, so when we see that bearish volume imbalance negated, creating a bullish fair value gap, these are fair value gaps that we would expect to hold if price is bullish. So when this one gives way, right, it tries to hold once and then in one swift motion gives way. That right there can tell us that we can trust this now as an inversion. And that is why this one here doesn't need to be retraded into. So instead we create the inversion, we create the new premium fair value gap, and now we break lower. Right, notice how as we close underneath this, so now creating this as an inversion, we're doing it with the volume imbalance, and notice how that volume imbalance is what holds the bodies. So the wicks go higher into the higher premiums, bodies hold the volume imbalance, and the lowest here. Ultimately we get now one, right, quick delivery into that sell side. Bloop. So we clear sell side here. And now we still have this daily volume imbalance, right, and sell side resting just underneath that. So as we headed into the close of Wednesday, we actually didn't get into that sell side. And it wasn't till really Wednesday night that we got there. So this was kind of after hours trading. Right, power hour gets real close to that low, but then kind of retraces back up into the range, back into that midnight level, into the daily fair value gap. And then overnight, we actually delivered into that low again. So at this point, right, we're still just creating absolutely brutal conditions, consolidation conditions. I mean, if we just zoom out, right, this is ridiculous. Let's clear all this up. Cool. So as we head into Thursday, we still have the same idea. Price most likely will just continue to consolidate. All right, we're not expecting a lot of aggressive movement in either direction. Still gravitating right around that daily fair value gap. Right, so within here, we still just continue that seek and destroy. Toward London, right, we create highs, we create lows. We run out to take the lows. Here in New York, we run out to take the highs as well. Right, one thing that we can kind of point out here is we do have this now. So that 930 setup that often plays out. We have a 1 minute inefficiency here. If we look right at this point, we've created a low and we've created a high. But sell side was really the last thing that was ran, right? So we ran out buy side. We then create relative equal lows and we clear that sell side. So this is the parent leg that we were within. And if sell side was the one that was most recently taken here, it would make sense to look for now buy side to be ran. Right, so we get into the lowest discount in the form of that 1 minute. Notice how we aggressively break back above that now, creating a bullish fair value gap. And this bullish fair value gap actually never gets traded into. So I want to say we had a 5 minute, at the time, was it the 5 minute we were looking at? Need to have these labeled. No, I don't think it was the 5 minute. Oh, well, regardless. Right, we have created here. So this is a bearish fair value gap. We're pushing up and through that. we're pushing up and through a bearish volume imbalance, and this is also the midnight open. So as we're breaking above all these levels, we would expect that price would want to hold these, right, if we're going to continue bullish, especially seeing as how we've been running sell side most of the morning, right? Same way here on this run lower, we've been picking up sell side here, sell side here, sell side here. So it makes sense to reverse and start attacking some buy side targets. We have this buy side that gets, right, buy side here's the target. Obviously this was once again high resistance, right? So a choppy morning opening. Not surprised to see something like that, right? We spend a lot of time going back and forth in here. Ultimately, we kind of get back into the daily fair value gap, and this level here is a daily volume imbalance, right? So as we are running a short-term low, right, notice this, we run a short-term low here. We've picked up sell side. The candle bodies are refusing to close back below this volume imbalance, and we're leaving this fair value gap here as a breakaway. So when I see that, that indicates to me that price really does want to continue bullish, right? So we're able to get back above this original 1 minute, and now we're creating a volume imbalance here that is paired with a fair value gap, right? Not only a fair value gap, but we're also breaking above a daily volume imbalance. So if we're bullish, right, this was kind of the highest probability setup that we saw for that morning, to where this fair value gap could be used. You can use the daily volume imbalance. You could use this 1 minute, right, consequent encroachment. You get a lot of opportunities in here. But the swing low that was formed should be kept and protected, right? And for short-term targets, you could just aim for that low-hanging fruit, which would be buy side there. So even in terrible, choppy conditions, right, there's still opportunities to capture low-hanging fruit if we kind of know what to expect and look for. Ultimately, though, right, we clear the buy side. Notice how we clear it with the fair value gap. So this in itself would be a bullish signature. So if this gives way, right, we would expect price to want to continue lower. So it closes underneath it here with this candle. It then returns up into a deeper premium, but notice how this high gets left. And then we break below it again, creating a new fair value gap. So at this point, right, when we create this new fair value gap, breaking underneath the old buy side, we would see if short-term sell side wouldn't want to be the target. Because once again, we're just continuing to go from sell side to buy side, sell side to buy side. And we notice now how we have sell side here, just above a higher time frame sell side pull as well, here. So now we have relative equal lows. And you really see how, right, in consolidating markets, we're moving from just buy models to sell models. So we're creating short-term highs, we're clearing those on the way up. So now the short-term lows that are created on the way into buy side, those are what get targeted on the way down. Right, so we had inefficiencies, we have short-term lows. Right, we could even point out, you do get a setup here, to where as we break back underneath this buy side pull, we leave that fair value gap open, right, and then we retrace up into it, giving a little deeper retracement. We were looking at this potentially as kind of holding us for the meantime, because we saw that as we break underneath this daily fair value gap consequent encroachment, we're doing it with a new fair value gap. So if this was going to hold us and remain bearish, right, we wouldn't expect to see it close above. So as we go short there and we close above, we just immediately close it on the next candle that returns into it, because it's going against what we would want to see anyway. Right, so if price really wanted to remain bearish from this level, there would have been no need to return above it. Returning above it indicates more than likely we use it as an inversion, as we see here. And this inversion returns us into the actual higher premium we were aiming for. So back up kind of into the extreme of the range, right? That old buy side pull, the untouched inefficiency. And then from there, we create a short-term high. We run that short-term high. Would have had to be a turtle soup entry, because once we break structure, notice how we never really return into these higher fair value gaps. All right, we break structure from here, breaking underneath this low. At this point, we still have not delivered into the actual sell side target. Right, so now this is the sell side objective, and this one here. So as we leave, right, and break underneath the daily fair value gap, we're also breaking underneath. Remember, this black line here is the daily volume imbalance. And now we're doing it with a new bearish fair value gap. So we like this bearish fair value gap here. Price did paint outside a little bit, paint outside the lines and returned into the higher one, right? Returning into daily fair value gap consequent encroachment. But if we look at the bodies, as we often say, look at the laser precision here to where the bodies hold, hold that volume imbalance paired with the bearish fair value gap perfectly. So we get the higher mohawk into the fair value gap here, which if you look to the left is just an inversion level as well, like this. But then ultimately the candle bodies hold this level and we deliver into now sell side here and then sell side here. But even on the way down there, right, once again, just high resistance. So we clear this low first and then we engineer a short-term low. Right, we give a deep retracement, we then clear this low. And still, after clearing this low, we could have easily ran into this low, but no, right? We hold that for a little bit, we retrace into the midnight level. So classic high resistance. And then we finally deliver into that sell side. So even if we manage to get short here, right, or up here, when we start kind of delivering like this is where traders kind of get shaken out of positions, right? They're spending a lot of time consolidating. Where ultimately, we still have sell side targets, but it's just going to be higher resistance. So finally, we deliver into that sell side. We go a little bit lower, right? Kind of delivering lower, heading into lunch. But now, if we look here, right, we get a quick little short-term YouTube model. You know, this is kind of what we talked about in the market recap for Thursday and Friday, but we get that short-term low. We break structure. We create a new fair value gap here that's bullish. We're turning into the down close candle, but kind of holding this as the low. And then from there, we just slowly stair-step our way back into buy-side targets. So once again, right, we clear all the sell side. Well, now when we clear sell side, we have engineered new buy side. So highs here, highs here, highs here. I really hope you guys are seeing how this kind of just repeats over and over. Right, it's moving constantly from highs to lows, down to lows, right, to clear highs, to clear lows, to clear highs. So when we're in this consolidating market, that's really what we expect to continue until we really, right, kind of break away from a higher time frame level aggressively and show an unwillingness to return. Because ultimately, like within here, right, we don't really do too much, just consolidating around the daily fair value gap. We had pointed out that you do get afternoon setups still. So if we were to look at this kind of price leg, right, well, we can say, okay, we've cleared this sell side. We've come back up to clear some buy side, but now we've created a new short-term high. So if we're going to expect that this short-term high gets interacted with, especially after seeing now, right, we're coming back down to pick up a lot of sell side. We want to wait for kind of a clear reversal signature, and that would be here. So notice how as we're breaking through a low, we're doing it with a fair value gap. This is a signature we would expect to hold bearishly if price wanted to continue bearish. Because if you notice, right, like as we're running this low, look how it's a wick. And even here, as we're running this low, right, it's just a wick. So when you see something like this, that's an obvious signature that we would expect to hold price if price wants to go lower. But instead, right, we see that now this fair value gap gets overtaken with a bullish. So that right there can signal to us that, okay, price now wants to return bearish and start attacking, right, all the buy side that was left behind and create that buy side of the curve. So after we create that inversion, this is what ends up holding us, right? Both the bullish and the bearish inversion. Even within this, we're getting mini seek and destroy to where we have equal highs that get cleared. We have equal lows here that get cleared. And notice how we form the same thing right here. To where as we break through, right, this is a low and this is a low as well. As we're breaking through that on this tiny 1 minute time frame, we're leaving behind a bearish fair value gap. So when this gets closed above, we can expect that something like this would want to hold us, right? And that's what we see. Price actually creates a volume imbalance, never returns into it. And then from there, we attack buy side here, buy side here, buy side here. We leave relative equal highs below this buy side objective before finally delivering into that buy side as well. And then from there, we just kind of continue to gravitate into this high. So after running out all the lows, we come back to once again run out highs, continuing to put in that seek and destroy delivery. Right, so back and forth, back and forth, back and forth, just constantly back and forth. Remember, this is still the 1 hour fair value gap here. So now as we head into Friday, last day of the week, we didn't really look at anything after Thursday morning. Friday, we see that we once again can create consolidating conditions. This here had our eye. We create relative equal lows just under midnight. So already we have a sell side objective here. And now we've created relative equal highs just below equal highs here. So price is still engineering that liquidity. We expect consolidation to continue. So once this buy side gets cleared and we break structure lower, well, it would make sense to look for the relative equal lows to be hit next. And within here, right, you get that breaker formation, high, to a low here, to a higher high that gets broken. And now these down close candles would be our breaker, as we're also leaving the daily fair value gap. All right, so we like to see overlapping PD arrays. If I put this on a higher time frame, probably be easier to see for you. All right, so like the 2 minutes, pretty obvious to see. The 5 minute as well. Right, the breaker here. So we could use that. Like this. And you'll notice how, right, so we engineer the breaker as we're leaving the daily fair value gap. And now once we close underneath it, right, so the first candle to close underneath it is here. Then we return into the breaker, give a short term, right, run lower. And then one last time we try to get into it. And as we speak of with the bodies refusing to get into it, that's kind of what we like to see. So we wick into that breaker and then we break aggressively through a low. So at this point, this is kind of where you can look, right, for potential entries. It's also the YouTube model. So not only is it returning into a breaker and rejecting, but it's also clearing a short-term high here. Short-term high cleared. Breaking structure here and here now. Right, the low that runs out the high. So overlapping concepts here. And now this fair value gap gets used. Consequent encroachment holds. And we deliver into those relative equal lows in the midnight level. You notice how when we close underneath that, we actually use it as resistance. So now at 9:30, right, we get a quick little Judas swing back into this fair value gap. Quick run up into it, still holding the old low and the midnight. And then we get an extended delivery lower back into the daily volume imbalance. So the daily levels, once again, acting as a magnet. You'll see how as we deliver into this, once again, just hideous action in here, right? So a lot of consolidation. There's little inner workings that we could always look at, right? That can, or we could always point out structures and let's say entries, but within here at the time, we wouldn't really even want to be looking at it. I could obviously point out, however, like, right, this last run on stops here. So we create the short-term low, we're holding the daily volume imbalance. We clear out a short-term low. And once again, that purge and revert, right? So we clear it, we aggressively revert, creating a discount immediately. And now we would want to see if the last premium, right? So this fair value gap, as we deliver into it, you watch that. And we see how that gets overtaken in one swift motion, coming off of a daily volume imbalance, clearing sell side, right? And while we have all this buy side now here. So we have buy side that was engineered. We've cleared the sell side of that range. So now the buy side of that range should be the next target. We create an inversion while creating a bullish fair value gap, right? But you see in here still getting ugly delivery to where we actually return all the way into the daily volume imbalance, even kind of closing outside of this 1 minute fair value gap. We get back into it quickly, still respecting it, but you really see how it's just murky delivery, right? Ugly, low resistance or high resistance delivery. Even things like this volume imbalance, right? We continue to kind of paint outside the lines to where we hold it initially, but then we go back into the fair value gap, but then choose to hold it again. So you see that the discounts are holding us, right? So you just have to have a wider stop, really on like the swing points. And then we deliver back into that buy side. Slight retracement, just back into the range, right? Ultimately delivering back into, this is the new day opening gap, midnight level. So we hit that midnight level. We consolidate around this new day opening gap, right? You can even look for like quick 5 handle moves like in here. So as we're breaking above the new day opening gap and the midnight, we're doing it with, boom, a fair value gap. So you would expect something like that to hold you in the short term. You can go stop on the swing low. You just have to target like 5 handles. So that's usually what we do, right? And that would have got you 5 handles there. But then once again, after we get up and through this short-term high, kind of attacking equal highs here and this swing high, we then reject, break lower in the short term, going back for this low, and now the equal lows that were created. So continuing that classic give and take, right? Seeking the short, clearing buy side, returning to clear sell side, returning to clear buy side. And now the same way here, right? As we clear this sell side, we have a fair value gap here, aligned with the new day opening gap that then gets broken with a bullish fair value gap. So we would expect that now this buy side here would be that next target, and that's what we get here. So if we go back for buy side now, boom, right? We clear the sell side, we clear the equal lows, we create the bullish fair value gap perfectly aligned with new day opening gap. And then even in the short term, right, we're clearing short term lows still. So we quickly clear this short term low, break above new day opening gap, revert back into it one more time, right? Finally leave it, attacking buy side here. Volume imbalance was kind of that last entry that you would get. But then you'll notice this is during power hour. Once we clear that buy side, we aggressively reprice to clear out the sell side. So brother, sound like a broken record out here. How many times you said buy side and sell side? But y'all should really see the significance, right? Or I guess, see how consolidations deliver. How many times have we gone from buy side to sell side, from buy side to sell side, just back and forth? Right, even here quickly, we clear sell side, create a short-term high, we attack sell side again, and then we revert to attack buy side once more. Ultimately, kind of just returning into that new day opening gap, paired with the midnight, paired with an inefficiency, right? High to low of this, returning into equilibrium. And now we are here. This is also a daily volume imbalance, but I don't know where my daily volume imbalance is. Hold up. Gotta make sure I got the right one. Here. Ah, there it is. Okay. There it is. So this is the daily volume imbalance as well. Right, and that is this one. Oh my gosh. But that's the low of it here. So we've just tapped that level perfectly. So in reality, right, we've still just continued to gravitate around. There's now 1, 2, 3, I think 4 daily volume imbalances. But if I hide this, if we hide this and just go back to the full week, right, we'll see how Tuesday was basically the whole weekly range. So consolidation led to an expansion, which is now why we are back inside this consolidation. But yeah, that's really all for the week. See if I can clear up some stuff here, geez. No, see, I need the volume imbalances though. Honestly, we'll just smoke this up fresh. Because I'm like, there's so much in here. It's ridiculous. All right, fresh chart. So going forward, I would really expect what we got here. Okay, so we had relative equal highs we were aiming for. We obviously were expanding so aggressively that we need to create some type of short-term consolidation to maybe even get people to try to short like a double top, right? Retail thinking, go lower, and then we obviously blasted right up and through the highs. Well, now we have these highs here. So really the same thing, two relative equal highs on the daily sitting right next to each other. We've been aggressively repricing higher. So for me, even though this is where it can get tricky, right? Because we have this volume imbalance here, and we've already returned into this daily fair value gap quickly. So this may be institutional order flow entry drill, and we could just continue to run from here now that we have this one too. Right, so we can hold these and continue to expand. I would actually prefer to see, just in the short term, like one run through an actual low like here, right? Or this low here. So we have this whole 4-hour fair value gap that has yet to be touched. And then also on the 1 hour, right? We actually never got back into that fair value gap either here. So ideally, I would like to see this be interacted with. The only thing that's causing me hesitancy though is these daily volume imbalances, right? Because price is trying to get underneath them, like here, or even here a few times, right? We've tried to wick lower and return into this, and we can't. So I don't want to get caught in a situation where I'm trying to force the bias, right? Because that never works out well for anybody. So in a situation like this is really where, right, it's tough because we don't have a solid bias at the point. Like I have a macro bias of I want to see price get into here, but nothing in here at the moment is giving me full, we'll say, confidence and confirmation to just start longing. So coming into Monday, right, tomorrow, we'll have to watch and see. I want to see how this fair value gap here reacts, actually. Because this was the most recent run on stops, right? So we cleared short-term lows on Thursday. And then we broke above that high. So this is the kind of the most recent YouTube model we're within. We've already held that fair value gap once. So if we should, or if we want to return for highs, we shouldn't get any lower than this. Like if we were to get back underneath this fair value gap, I think we just continue to bounce around the daily volume imbalance here. Right, and that's very possible. And this is one. And this is one. So right here are the daily volume imbalances. When they're all jumbled like this, and then we have still, right, the daily fair value gap that we were using here. And we have these pair of daily volume imbalances. I think we have a high chance of continuing to consolidate. If price really shows signatures of wanting to expand higher, I would trust that eventually. But yeah, with all these levels, right, these are all daily volume imbalances here. I would just need to see a pretty aggressive move higher. Like for me, we can run through a little scenario actually. If we were to come into Monday, geez, that's the longest line. So we got Friday here. If Monday's price action can hold this low, potentially, like if we were to hold this low, bounce off fair value gaps, and form some type of bearish fair value gap that got overtaken, right, then I would actually start looking for longs again. So what I mean by that is like, say we, right, go lower quickly, maybe use this as resistance, but kind of hold this fair value gap here on a higher time frame, right, and then overtake some type of, it could either be a fair value gap or it could be an actual YouTube model, but some type of, right, bullish PD array. Especially if we start now getting above daily volume imbalances again. I'd look for these highs here. Just straight like that, parabolic. But yeah, because that's that 1 hour fair value gap. So ideally, we don't get much lower than the actual 1 hour fair value gap, right? We can maybe go outside the lines a little bit. But I'd like to see something like this maybe. Yeah, that'll be all for today, everybody. If you guys have any questions, we'll chill out here for a little bit. Price has not been moving too great lately. But luckily we can kind of still take advantage of it. Once we start trending though, it'll be even better. That is crazy how many volume imbalances though. Like if we were just looking at this chart. I just would like, I'd like to run lower. Okay. How do I avoid over? Oh yeah, and the measuring gap. Yeah, I can talk about that quick. So the measuring gap we used was, what day was that? Thursday, Friday? No, I'll be forgetting. But in theory, right, we can kind of just cover what the measuring gap is. If we have an objective, I want to find the actual example that we used it in though. Thursday, okay. So you got me tripping. Here. No, wait. This one? So, I mean, this would be one here, I guess, as well. Yeah, we could use that. In theory, right, the measuring gap is... I'm going to move the daily... We're just going to delete these for now. These are all the daily volume imbalances, whatever. I'll get them back. Right, so if we were to look at something like this fair value gap, notice how there's actually another one here. So I like to see a measuring gap paired with a breakaway gap. Right, so we have a breakaway gap here. This is the one that we could use as the measuring gap. And now what that is if we have a buy side target here, it just gives us an extra target of how price far could reach. Or like if the standard deviation is paired with it, it's an added confirmation that price will want to get there. So what I do for it, right, is I take the swing low of the parent leg that we're currently within up to the kind of inception of it. So this low up to where the fair value gap begins. And then you run a projection. So when I run a projection of that, right, I notice that one standard deviation is above the buy side pulls here. So that right there just gives me an added confirmation that buy side could be the target. And you actually notice, right, when we wick into that, notice how that candle closes on that one standard deviation. So we wick into it first, hesitate, get slightly above it, but then break back underneath it and return back into the range. So yeah, right, your question of, is it a swing lower liquidity to the bottom of a fair value gap with displacement? The way that we would use it is off of a swing low or a swing high, in this instance, swing low. We have to have an objective that we're reaching for, and we would want to see a breakaway gap being formed. So ideally, it's two fair value gaps, right? Like we mentioned, this here becomes the breakaway gap, which then means that the next one here would be used as that measuring gap. And we usually would see this formed in the middle of the move, right? So we'd like to see that buy side here. We're in the middle of the move. It's just an added projection to how far up we can go. And like we can really kind of use it fractalize, which is where I don't use it too often because it can get a little tricky if you're trying to use it all the time. But like, let's say that you were expecting, right, this to be like a measuring gap. Well, then you would have to take like this high to the inception of this fair value gap. Right, because we've created a new dealing range when we clear the high and then break lower. And if you notice, right, look how we deliver actually into that. And only after delivering into the actual projection do we then retrace back into the fair value gap. And yeah, Vin, how do I avoid over trading? So for me, honestly, I go into it with the pre-understanding that we're consolidating. So if I take 2 trades and I lose twice in a row, I'm done. Right, there's no if, ands, or buts, there's no arguments, there's no, oh, but this setup looks nice. Right, if I'm already predetermined that we are in a consolidating environment and I take 2 losses, then I have to be done. Aside from that, right, on the actual like wins and stuff we take, I usually wait for external range liquidity points to be taken. So I'm waiting for a run on some type of liquidity and then trying to enter on that. Right, so we're a little more patient in our actual executions. We need to see just stronger confirmation, right? Whereas if we're in a training environment, right, and I see a discount that gets formed, I'm usually comfortable entering on the discount regardless. Whereas like in here, because there is so much back and forth, like let's say for instance, like we were trying to use this as a bullish fair value gap, right? You could say, oh, well, we ran a short-term low here. Right? Oh, okay, we ran a short-term low. We're breaking above the midnight now with the new fair value gap. Right, that would be a setup that's valid most of the time. And then we just get our face ripped off. Right, so it's a lot of give and take in here. I try to keep it to 2 trades a day usually. If we win, maybe add another one, but the idea that we're going to be in a consolidating market is kind of what saves me from over trading in general, because I'm already hesitant to be entering, right? So I'm not trying to enter on just every break in structure or every setup that I see. But all right. Hey, no problem, brother. Anyway, to be honest, I used to get chopped up like this a lot. Because like, right, my kind of neophyte brain would think, oh, we just had a huge expansive move like this. We're going to continue to run. So right, I'd be in here these few days trying to just capture crazy expansive moves, just getting ripped back and forth. Whereas now, as you guys saw in the live streams, right, I don't necessarily struggle with overtrading because I'm not trying to aim for crazy targets. Like I understand we're consolidating like this. So most of the time we're aiming for, right, 5 handles or short-term inter-range liquidity points. I'm not necessarily holding for expansive moves like I would if we were trending in a given direction. He said it's a bull flag. Yeah, I went through this week's trades kind of, right, each day that we talked about it. There was a few. None on Friday or Monday. Really just Tuesday, Wednesday, Thursday. Actually, we didn't take any on Thursday either. Just Tuesday, Wednesday. Yeah, it was like Tuesday and Wednesday. The shorts and the longs. That's really all we needed, right? The shorts here. The shorts into our sell side. Followed by the buys into the high right there. So that was 10. And then on Wednesday, that was Wednesday. Tuesday, we had once again just 2, right, rather small 5 handles. So here was the first as we're breaking above the high, down close candle. Remember, we were holding a 5-minute fair value gap here. So we had the 5-minute fair value gap. We respect that. We break above, creating a new fair value gap. First entry. Second entry came as we broke above this, paired with a new week opening gap. On to swing low. And then we just got out at the high there. All right, 5 handles. I wish we got that whole move, but for us here, boop. So we partialed here and then we close at the high of it. But yeah, for us, pretty simple week. Right, that's the thing. I'm not trying to do too much on weeks like this. We get our oh, sorry, I'm reading your questions. How long have you been trading? Let's see. 1, 2, 3, 4, 5. 5.5 years? Damn, that's so long. 6? 2018. I started in 2018. Right, not I would say legitimately, but I first kind of got introduced then. I started at ICT 2019, and at that point I was really all in on ICT. So it took me roughly, I would say, 3.5 years before I was able to make any profit from my trading. Right, so it was a long grind, that's for sure. A lot of thoughts of maybe it won't work out, but we kept pushing. Because I found him in 2019, 2020. I would say 2021 was when things kind of really took a solid change. And then when he released the 2022 mentorship, it was like a whole nother level. And I've mentioned that before. Something about that. I don't know what it was, but I was pretty good before that. I had a good understanding. But when he released that 22 mentorship, the first like 3-4 videos, it like clicked something that I had just wasn't able to see for myself. And then after that, it was GG's. GG's in the chat. Yeah, I'd say 2 years till I got about break even. Another year before I was like barely above that. And then obviously now here we are. When will we be, when will we know we are outside of the consolidation? So for me, right, if we can get above, if we can clear, I would say really this fair value gap here. Like, so for me, if we can get above this fair value gap, so I want to see higher prices, right? This is with the understanding that we are going higher. We can obviously go lower a little bit, but if we can close above this fair value gap, then I would look for price to actually start expanding into this high. And then in that same understanding, if we can clear Wednesday's high, right? If we can break Wednesday's high, we should be able to now expand into the higher targets. So I'd want to see us close above this 1 hour fair value gap and actually get above Wednesday's high. And I'd like that for we're at that bullish stance. Yeah. Daily. So yeah, that's kind of what I'd look for actually. We're getting us above this, which would then get us above this daily volume imbalance here. And then we could hold that to deliver us into buy side, into higher targets. Retail bull flag is visible. I mean, yeah. I was like, they could see that, I guess, but we don't really look at retail patterns for that one. Dude, because it wasn't heavy. My first payout was in 2021. My fault, I just saw that. So I was able to secure one with just, at the time I was doing a order block OTE system, right? So I didn't trade like I did now. My system back then was simply, I would look for like a break in structure. And then I would look for an order block within that. And then if the order block aligned with the optimal trade entry, then I would take that. Right, so rather simplistic. It was a lot more mechanical, but it still worked pretty well. Like, right, this original one, so like we could say this, I'd look at the order block and then I would run like a fib and try to get the OTE main fib. I still have it. That's what's funny. And then I would look for a return into the, like, kind of the golden zone that he would talk about, his optimal trade entry. And now I would have my stop above the swing high. And then for me, I would usually try to go for 1 for 2. Or if there was like an actual higher time frame low, then I would aim for that. But rather simple, rather mechanical. Oh, when was your daily, nightly trading routine? I mean, for me, right, my nightly routine consists of, and because I make the videos for y'all, I've kind of got into the system of where I used to go back up and mark my charts each night. But now that I do the market recaps, that's really all I do, right? Because, I mean, we're getting a recap in of what the day did and what we expect in the future. So for me, I'll usually the night before make that market recap, post it up, right? Might spend a few extra time just kind of looking at charts of potential other delivery targets. But then in the morning, because everything is done the night before, I'm not really doing too much in the morning. It's like, right, if we get on at 9:25, I'm usually honestly getting up at like 9 o'clock, 9:10. Because I already have all the levels I'm looking for. I already have all the areas I expect to be hit. So it's just a matter of waking up, seeing what price is done in London, and then adjusting for what we expect to happen in New York. How come the quit? I don't know, honestly. Probably just the way it is. It's just a template. Let's see. Buy side. Wait, what? Why is the color of the dollar sign is green and buy side and sell side are black? Oh, you're asking me that. They're just, it's emojis. I was like, what? They're just emojis. It's like when I entered this in for my template. Right, I'm on Windows, so if you press Windows period, it pulls up the thing, like money. Or I don't know what I type in. Dollar. Now you just use the dollar sign, so it's green. That is all, nothing crazy. Hey, I'm glad you like him, Diver. Diver, did you have a different Discord name? Because for some reason, I know most of the OGs, but I'm like, I don't know why your name is not ringing a bell. I'm fake as fuck for that. Now with Mac, it'll be control period. Or whatever that, I think it's control you guys have. Or command. You guys have command, I think. Oh, okay. That makes sense. Vinny, I did recognize that. I was like, Diver down. I felt bad the other day. I was like, what? An OG I don't remember. But that makes sense. Vinny E Mini. That's fair, I guess. Didn't want to be mistaken. That'd be a tough mistaken identity case right there. Vinny E Mini. What a guy. I think I got him on one of my posts a few times. That's how you know you made it, if you're getting hated on by him. Oh, that's funny. Bang. I'm gonna do a... I guess since y'all are in here, you can get first kind of notice of it. Because we got to 10K, and I appreciate y'all, I actually am gonna do a little discount. You guys talked me into it. I was always against it because I felt like it was already cheap, but it's alright. We give back. But I'll actually get it. I don't know how to set it up within the Discord. But because we're getting to 300 members too, we're about to hit 300 total members in here. So as soon as that happens, I'll kind of send the announcement. But basically it'll be 3 months at a discounted rate, or if you wanted to do the yearly, it'll be like 30% off of that. He's special, not in a good way, facts. Do you view charts as market maker models? For me, that's one thing I've got asked a few times. And it's a tough answer for me because honestly, I would say yes, but it's not like actively. You know what I mean? So like as I'm looking through things like this, right, I do see like consolidations and highs that should be hit, but I'm not marking like original consolidation, redistribution, right? Redistribution, reversal, like smart money buys. It's more of just kind of the understanding of, right, as we're moving through these buy to sell models, the opposing liquidity will be taken. And that's kind of what we were speaking of. Right, so like on this way, like as we go lower, I would expect highs to be interacted with. And now like, right, if this is the sell side of it, right, I would see like, okay, original consolidation is what it would be in theory with like a reaccumulation. But I'm not necessarily looking like that. I'm just saying, okay, we have sell side, right, we're going to attack the sell side of the curve. Well, now if we're going up higher again, right, we have that buy side of the curve with highs. And now on the way lower, we have the sell side of the curve that gets attacked. So it could be helpful for sure to, I guess, get familiar with the market maker models. Because I spent a lot of time learning them, which is why I think that I don't necessarily like subconsciously think about it too much. It's just something that is kind of ingrained now. But I definitely did spend time learning them, if that helps at all. My Apex code is, I don't really know what it is. Oh, I have it in the announcements though. Like if you go to the announcements, That link that's there should be mine. I'm not sure how any of that works, to be honest. Interesting. Oh, wait, no. Okay, so the code itself is whatever the actual... Yeah, I should have put that in there, goofy. The code is whatever the actual code is for on Apex. Wait, so let me see what it is. I thought, wait, what's it at? Damn, I might be blind too, actually. See, I've never done no affiliate stuff, so I don't even know what, how the hell that works. See you on... I'll actually have a stream tomorrow morning. I don't expect much will happen tomorrow morning, but I probably won't be doing anything. Usually I don't because I go golfing Monday and Friday. But with the weather being a little worse, we'll actually probably have more live streams now. Because if I'm just sitting here looking at the chart, I'll probably stream it that day as well. Even though I won't be taking trades on some of those days. But like, yeah, tomorrow, even though we don't have high impact news or anything, I'll actually have a stream where we'll chill out and read price, see what we get. So yeah, plan for Tuesday or Monday. If you're a member anyways. Tuesday will be the next free stream, so. Yeah, bank holiday Thursday. Obviously it's Thanksgiving. So I mean this week in general will be shorter because, right, I'm going Wednesday night, I'm leaving to visit family for Thanksgiving. So we won't have anything Thursday or Friday, which is why I'll probably just go Monday, Tuesday, Wednesday with the streams. So tomorrow morning at 9:25 Eastern, Tuesday at let me check the calendar. Tuesday FOMC minutes in the afternoon, and existing home sells at okay. So Monday will be 9:25. Tuesday will be 9:55. We have high impact news at 10. So we'll wait for that. We'll basically just do that silver bullet time from 10 to 11 Tuesday. And then Wednesday, we have high impact news again at 10. So it'll also be 9:55. And then Thursday, obviously off. Friday off as well. And then we'll be back on that following Monday because there is high impact news that following Monday, actually. So yeah, we'll be getting into more streams. Right, we're heading into the cold hours, so you guys should be getting lucky. Might have a few more power hour streams potentially as well. But we'll see, we'll see. But yeah, everybody, if that is all, keep an eye out for that discount coming your way shortly. Anyone should be able to use it. All right, everybody. I was just getting everything set up. But yeah, we will talk tomorrow. If not tomorrow, then we will talk Tuesday in the free stream of the week. So hopefully you guys had a good weekend. Stay safe tonight, and we will talk tomorrow, everybody. See you guys.